This is the performance summary for the weekly reversion strategy for the week ending March 6th. Let's start by inputting the current balance in the account. So I lost a little bit last week. Account was down $114 or a percentage loss of 0.35%. I actually should have lost a little less than that. There is a trade that I should have done in another account that I placed in this account by error. It was just a $65 additional loss, so it's not a big deal. I'll just leave it in here for performance numbers. So these were the 5 positions we held over the week, and they're all weighted at 10% each, which is half the usual allocation of 20% each. And that's because the strategy has determined that the overall US equity markets are in a bear market condition. And the way it does that, it looks at the weekly frequency data of the OEX index, S&P 100, and it looks at where it is relative to its 26-week weighted moving average. And we can see that it dipped below there as of about 4 weeks ago, and we're well below it currently. So this could be the beginnings of a bear market, of a big bear market. We shall see. And it's going to be positioned half strength as long as we're in that condition. So the first trade that was done was Boeing, up 2.26% for the week. And this is how the trade looked for Boeing. So this is a dip buying system. So we bought this dip, entered here, and exited here for a profit. Next one is General Motors, down 2.78%. Here we bought the dip, but it never recovered. The third one is Goldman Sachs, down 2.2%. Here's the dip, and here's the losing trade. And Morgan Stanley was the fourth trade, down 1.46%. Entered here, exited here. And the last one is Nvidia. That one made money, up 1.6%. So we bought this dip here post earnings, and we made some money during the week. Let's input the current balance into the cumulative tab. And this is how the equity curve has evolved since going live in 2024. And let's look at the equity curve and performance long term. Here's the back test going from 1994 to present date, over which time frame the strategy has an annualized return of 20%. Compared to 8.66% for the S&P 500. And year to date 2026, the strategy is up 4.7%. And this is how the back-tested equity curve looks compared to the gray line, which is the S&P 500 benchmark index. So if you're interested in learning more about weekly reversion, or you'd like to sign up for my Signal service where I email you the stock picks into your email inbox on a weekly basis, please visit my website at returnstream.com. Link is below. Thank you.